All right. Thanks everybody for tuning in again. This is another edition of a webinar interview style that we are doing today. It's going to be on healthcare and all things healthcare. We're joined by Mike Butler. Hi, Mike. How you doing?
Good. How are you, Brandon?
Doing all right. Hanging in there with crazy 2020, but like we just talked about before, business as usual, staying as busy as we can, and trying to help as many people as we can. So
thanks for having me. Happy to help you and your clients.
We're very excited. This is one of those topics that I think overwhelms and freaks people out every year right about this time. As we get into fall, people are excited about open enrollment and making their choices again and figuring all this out. So
I don't know if excited is the right word. Excited might not be the right word, but maybe
it's not. One of our core values is making the complex simple. And I know you're going to do as good of a job as you can, but healthcare is a complicated topic, no question. So we're going to jump into a couple of questions that I've had a lot as an advisor. I know Mike and I talked about how we answer some of these pretty general questions that tend to come up often. And I'm going to kick it off kind of right away with HSA plans, low premium, high deductible, kind of scares people a little bit with the high deductible. So can you talk on HSA plans in general?
It's my favorite subject to talk on. The HSA plans, first of all, I've done the math 1,000 times in 1,000 different ways, as I'm sure you have, Brandon. And every time the HSA plan makes the most sense, okay? So don't be fearful of the HSA plan when you're on there shopping, whether you're shopping through me or through, whoever your agent is or however you're shopping for insurance. The HSA is by far the most powerful tool we have as business owners. I know, Brandon, you have one for your family. I have one for my family. It's that tax-free, right? The money we put into the HSA, we don't pay tax on this year, and it rolls over. Whether we use it or not is irrelevant. The money goes in there. We get deduction on it now, and funds roll over. I mean, it's so powerful and builds interest, right? So the number one rule is if we're buying insurance for ourselves, if we're not getting a government subsidy, okay? If we're going to get a government subsidy, that's a different conversation. But the HSA plan is the most powerful tool. So if I'm starting my buying, if I'm a consumer starting my buying, I'm looking at HSAs first because the math says it's the most cost-effective way. I've had clients call me all the time and say, Mike, I want the best insurance I can buy. And you know what I tell them? Buy an HSA high deductible and put money into a side account. Match your deductible, put money in a side account. Now you have 100% coverage on everything. Yep. So the best thing, it doesn't matter how you slice it, the HSA is going to be the answer.
Yeah, I'll tell you, you make the decision when you run the numbers. Do I want to give the insurance company all of my premiums? I know that from day one how much they're going to get, or do I pay them less and control where the money goes? And control is really the key for HSA.
And the math is simple. It will tell you every time you're better off paying the insurance less, paying yourself, putting money in that HSA every time. The nice thing about HSA is it's flexible. You don't have to put money in every month. You could put in as little or as much as you want. If you're having a good month, or if you're building up cash and you have cash in there, you don't have to. You could put money in your debt snowball. You could put money in an investment, or you could just keep the cash or spend it on something else. It gives you that flexibility. When you're paying the insurance company all that money, there's no flexibility. It's constant. You're paying that money. So HSA is just so powerful.
No, great point. Good stuff. That makes a lot of sense. So look into an HSA. I think that's a key takeaway, whether it's at your employer, whether you're self-employed. Yeah.
And I'm going to give you one other tidbit here too. And I just ran across this. It's a company called Clever RX. And I can email you this link, Brandon, or text it to you.
Yeah, we'll post it out when we edit the video. We'll post it.
It's a free service. Okay, Clever RX is a free service, and it will shop prescription drugs for you. So it will show you. You type in the drug that you have. You type in your zip code. It will tell you the less expensive, where you can get this drug at the cheapest cost in your area. It shops all the pharmacies, and it will give you coupons to buy this drug, to purchase this drugs. They pair up perfect with HSAs. So you know what the cost of the drug is before you fill it. It's a great service. It's totally free.
Yeah, my wife and I have gotten good at that, and it's staggering the difference you may see a 300% difference in pricing on those prescription drugs.
I don't know how it's possible, but you're exactly right. So it's a just a good tidbit. Again, if you want it, I'll definitely send it to you, and we'll it's called cleverrx.com.
No, good stuff. And like I said, just being intentional, knowing where your dollars are going, being, I think a lot of people call these HSA plans consumer driven. Just being aware of where your dollars are going makes a big impact versus just throwing it all to the insurance.
Yeah, exactly right.
All right, so to switch gears a little bit, maybe just for people who aren't quite sure, maybe talk quickly, the difference between a group plan and an insurance plan, and when do you utilize each of those, and what does that look like?
So group plan versus insurance, obviously this is when you have employees, right? This is when you have employees and you're looking to get the best value for your dollar, for your business, for your employees. This is when a trusted advisor or a agent as myself comes in, because this math is not as cut and dry all the time as the HSA plans are for individual products, right? This one takes a little bit of, shall I say, expertise to figure out what's better for you. Now, I will say, it doesn't matter if it's group or individual, the HSA is still the best buy. Here's where the trouble comes in, is from employee standpoint, they don't understand it. They don't think it's the best buy. The employee wants that traditional copay. So that's kind of the tough thing to overcome as an employer and as an agent, is saying, no, the HSA is still the better buy. Doesn't matter who's funding it. We try to say maybe a combination of employer and employee, but it's still a better buy to do a group HSA versus a copay plan. But again, employee or individual policy versus group policy, it's a little bit tricky. We got to run some numbers there and let the math speak for itself. Okay,
good stuff. All right, now let's kind of move forward in life, and we work with a lot of clients who are doing really well on their retirement plans, socking away a lot of money, building up their nest egg, paying off debt, and getting into a position where they can retire before 65 and Medicare. And it's a great feeling to be in, where you can create enough income to live and not have to have your job anymore. You're financially independent. But the dilemma then becomes, what in most cases, and more these days, when you leave your job, they say thank you for your service, and your healthcare plan is done at the end of the month.
Yeah.
What do those clients do if you're retiring at 60 and Medicare's not kicking in? You don't have healthcare when you leave your job and potentially retire.
Well, number one is my stance does not change on HSA, right? It's still HSA is the best buy, right? That's going to be consistent across the board. Now, from 60 to 64, that is the most expensive. That's where the insurance company sees you as the most expensive potential to use your insurance. So two things here. Number one is, when people say thinking about retirement, all that means is, do I have enough money to retire, right? That's code for, do I have enough money? So I think the number one thing is you have to talk to someone like yourself and me to plan, to budget for it, because we know between 60 and 64, it's going to be so expensive. We want to fit that in your budget. So you're not, yes, it's a big bill, but you've planned for it, you've prepared for it. So working with someone like ourselves is a huge benefit to our clients, so we can prepare for these things, because once at 65, that's going to be, for the most part, when you're Medicare eligible and you can get the supplement and really drive the cost down and get better coverage. So it's just a little bit of preparation goes a long way.
No, you nailed it. I mean, that's when we talk with clients, a lot of times who have built some wealth or in a good spot, they just think, I can't retire till 65. But like you said, all we have to do is run the numbers. What might that premium be? What might that out-of-pocket cost be? Let's put that aside and know it's there for healthcare, and now we're okay. We can still pull the trigger and make that.
And sometimes people are very, very surprised when they look at the HSA numbers, and it's not as bad as I thought.
That's right.
Yep.
So I think good transition now. Once you get to 65, you're going to be eligible for Medicare, where as you said, we kind of know what those costs and what the coverage looks like, as that's an across the plan. But we can add some supplemental plans, and can you talk on how that conversation goes and how you might help somebody get the right plan with Medicare?
Yeah, so it's a little tricky now with Medicare, because if you're still working and you have over 20 employees, all you need to get is Medicare Part A. I run across so many people who get confused and get Part B when they don't need it. Okay, so and it really screws you up at a later time. And that's a big financial error, is when people are getting Medicare Part B and they don't need it. So remember, if you're working and you're 65, and if you have 20 or more employees at your place of business, full-time working, you don't need to get B. So it's very simple. People are very confused about that part.
Yeah.
It's when they decide they're not working and they're losing group coverage, that's when they need to get Part B. And that's when we could help them with Part C, which is their supplemental coverage. Part D is their drug coverage, okay? And so there's so many options and so many plans with Medicare. And it's just basically sitting down like an advisor like myself to going through your options. But the cost on these things are pretty low cost, and the benefits keep improving. So it's a good time when you're over 65. That's, kind of the sweet spot for retirement age, because the benefits are so good for medical.
Okay, perfect. All right, I think this was a really good overview. Healthcare is, I agree. HSAs are a good place to start. Look at that, run the numbers. But healthcare is going to be a very individualized decision. If people want to, if they're self-employed, retired before 65, and want to talk with you about their plan and what it might look like, how can they reach out and get in touch with you, Mike?
Right. Yeah. My office is in Rochester Hills. I'm on the corner of Auburn and Livernois. My number is 248-844-9110. That's the absolute best to call me, leave me a message. We're still doing appointments. I mean, I'll wear a mask, and we're still meeting people. So, but we also have FaceTime available, Zoom available, phone calls available. We're virtual as we can be. So that would be the best. Again, 248-844-9110, and we could just talk.
Sounds good. No, Mike has been an awesome resource for a lot of our clients, for us personally at Kennedy Financial. We have a lot of, similarities. We kind of each run our own practice. We're big Dave Ramsey fans.
That's right.
Baseball. We both have great hair, right? I'm a little envious of Mike's hair. Yeah.
Well, that's all right. That's okay. Well, you got it you just got it in different spots. That's all.
That's the only place that's not a necessity. But, no, this was incredibly helpful. Like I said, from a topic that is really tough and can be daunting, take some of these as takeaways. And then if you're self-employed, or buying your own plan for some reason or another, Mike's a great resource. And especially, 65, looking at a supplemental plan in all those fronts, Mike can help.
I appreciate it, but that's really what the art of the agent does, is you take a complicated situation, take the maze, and you're really just walking hand in hand with the client to say, hey, don't worry, I got this figured out. Walk with me this way. It's to take that complicated issue and make it very simple.
Perfect. Beautiful. Love it. All right. Thanks so much, Mike. We appreciate it. If everybody has any other questions, reach out to us, reach out to Mike, and best of luck as we come into open enrollment with the new healthcare plan.
Thank you so much, man. Have a great one.
Thanks so much.